Alright, what's up everyone? Welcome back to the channel. I'm Tokenicer, and I'm here to bring you guys in-depth analysis, news, and insights from the digital asset space, along with covering the progressive tokenization of the world. So in today's video, we're going to be doing things a little differently. I'm going to be showing you guys and breaking down my mid to long-term crypto portfolio. So these are projects I intend to hodl for at least another year at the very least. So I won't be showing off some things like what I'm staking or my stablecoin bag or just other passive income type plays. And as always, there won't be any sort of financial advice here since I'm not a financial advisor, and therefore nothing you ever hear or read from me should ever be taken as financial advice. But on top of that, you guys are going to see I'm pretty down bad on a couple of these projects, so obviously don't take it as financial advice. But anyways, enough talking, let's get right into it. So first up, we got QUANT taking up roughly a good 50% of my portfolio. And most of you guys probably already figured that out by now anyways. So why is that? Now, from an investor's perspective, the fact that they're tying in licensing and gateway lockups in addition to being needed to do anything on Overledger, all into a token with 33% less supply than Bitcoin. Eventually, if the product is as good as we think it is, the price is bound to go upwards as demand grows, yet the supply keeps shrinking as more enterprises lock up more QNT to use Overledger. Along with this, more enterprises and general investors are going to want to stake QUANT onto gateways, taking even more of the supply away. And not to mention all the connections they got in the background, like ODAP with MIT, SDX, Hyperledger, Spunta, etc. And personally, for me, once QUANT reaches certain prices and milestones down the line, I'll be looking to slowly dollar cost average out. But I think I'll always be keeping a little bag of QUANT with me for gateway staking, and just the fact that the Overledger ecosystem is going to continue to grow exponentially. Because why build an application on one chain when you can build an application accessible through multiple chains? So yeah, not really a bag I'm looking to be touching for a while unless something really drastically happened. And that's going to be the same for all these projects on here. So I got into QUANT and bought the majority of my bag around the $30 to $40 area. So yeah, we're still decently up on that, luckily. And it's something I'll be looking to pick up even more of if we see a confirmed bear market or lower prices. I've still been buying a little QUANT here and there, but mostly just been waiting since at this point I'm just averaging up. Next up, we got Constellation DAG. So another one that probably shouldn't be too much of a surprise if you've been here for a while now. DAG being the tokenized index value of the hypergraph network's bandwidth and data is a really interesting concept. But pretty much investing in DAG, you're rewarded for the success of everything on the hypergraph, whether it be new projects launching on their network or just continued development. And I really think with some of the connections and partnerships Constellation's made, such as like the US Air Force, US Transcom, Space ISAC, and Splunk, it really makes for a solid investment in my opinion. With it sitting at about 12 to 15% of my portfolio, it's something I'm intending to buy more of and hopefully even set up a DAG node sometime soon to earn additional passive income. And as we can see, we're just at about break even for my average buy-in price. I initially got in with a small bag around 7 cents, but slowly averaged upwards a bit around the 15 to 20 cent mark during its run-up a while back. But yeah, that's Constellation DAG, another project I'm planning to hold for some time and expecting some big things out of. Next up, we got ETHEREUM sitting in third place at about 7% of my portfolio. And I'm sure some of you guys are surprised and probably thinking, what the fuck, Token? You shit on Ethereum so much and it's your third largest holding. So let me explain. Earlier on in Q3, Q4 of 2020, when I first started really getting deep into the space, Ethereum was the first big bag that I bought, and it was around 700-800 at that point. So obviously I'm still up pretty nicely on that and haven't sold any. Now, why wouldn't I sell my Ethereum for all these other lower market cap, fundamentally strong projects? Well, throughout all of 2021, I was kind of in a weird tax situation where I could only realize a certain amount. I won't be getting too deep into that, but yeah. But also keep in mind the fact we're all in different situations. I'm just gonna go and guess and assume a lot of you guys are either working for your own business or a 9 to 5 with a pretty consistent flow of income. So I'm a second-year college student working part-time for DoorDash and Uber Eats. and fortunately sometimes getting tips for bringing you guys all this content. Much appreciated, by the way. But point is, my cash flow isn't as consistent as I'd assume many of your guys may be. So instead of aping into everything and trying to live off ramen noodles, since I got in fairly early on Ethereum, I do have the luxury of collateralizing it for loans on stablecoins at near zero interest to buy dips on these other lower cap projects. Now again, none of this is financial advice, but I just really want to emphasize on the fact that you really shouldn't try this if you don't fully understand the concepts of a collateralized loan yet, because you could potentially just get your coins taken away from you. Collateralizing Ethereum allows a broke college student like me to have some more leeway and liquid cash flow to accumulate on dips without having to sell or use my own capital. And in addition to that, while I do shit on Ethereum a lot, I still do believe that in the midterm at least, when institutions get the green light to invest in the space, chances are they're gonna first start off with the lowest risk assets like Bitcoin and Ethereum. Now, whether it's gonna reign the dominant leader in being a smart contract layer one forever, I personally don't think so. I think that market will become more diversified and distributed its value with other layer ones in the coming years. I'll probably be looking to sell about half my bag once ETH 2.0 rolls out, and hopefully before all that staked ETH gets unlocked. With EIP 1559 in play and the constant demand to use ETH even with the outrageous gas fees, I'm not all too worried in the short to midterm. And even after ETH 2.0, I'll probably keep a small sized bag with me just to be able to continue collateralizing and keeping a liquid cash flow, until I find a more consistent form to generate cash, obviously. So next up, we've got Unizen in fourth place at about 6% of my portfolio. And this one should come with no surprise either. It's one of the next generation exchanges I'm super bullish on, being a chain agnostic exchange aggregator and bridging together centralized and decentralized finance. They bring a very unique approach to the incentivized ecosystem aspects by bringing in basically a bunch of assets from projects they've incubated, but also other proven strong networks that they're supporting. And with all the incentives and use cases of the ZCX token, it's honestly one of the few tokens I see and actually personally use as more than just as an investment, but even as something to just utilize on their platform. Whether it be staking to earn rewards from the growth of their ecosystem or to just earn a higher tier yield on my stablecoins in their DICE program. And not to mention the connections within their team from QUANT to the Board of Angels. So as you guys can see, I'm down pretty badly on Unizen at the moment, almost 50% actually. Obviously, I was up a fair bit more early on as I bought most of my bag around the $2.10 mark, but have been slowly averaging down lately. And Unizen's something I plan to gradually take profits on in the long term, but for now, I'm going to continue staking and I'll probably keep looking to do so with a smaller bag even after taking profits. A lot of these cryptos that are bringing in an incentivized ecosystem aspect to their community will really make it so that, say, in 10-20 years, the passive income you earn for being in the space early could literally just be what you live off of retirement. But that's if all things go according to plan, of course. We never know what'll happen. Just look at the war that's been stirring up the past month. Okay, but next project, ALLIANCEBLOCK, sitting at about 6% of my total portfolio. So another project that's working to bridge together traditional and institutional finance into the space of decentralized finance and tokenizing assets through global compliance. And what really did it for me about ALLIANCEBLOCK is some of the recognition and partnerships that they've formed with like the London Stock Exchange, L39, and NatWest. I missed out on the last ALLIANCEBLOCK staking pool as it got filled up in a few hours, but it's another asset I'm looking to honestly just stake and hold for some time, as I really believe long-term in what the team's working to build out. And again, we can see we're down pretty badly on ALLIANCEBLOCK too. Almost another 50%. So obviously ALLIANCEBLOCK has had better days and looked a bit better in my portfolio before everything that's happened. But regardless, it's one of the projects I'll be looking to stack a lot more of, since I think what they're trying to build out in the long term is really undervalued relative to its current price. I mean, $100 million market cap for a globally compliant decentralized market? Come on. And next we've got LCX, another next generation exchange. So LCX is the most regulated crypto exchange with 8 licenses and counting. and they're working to build out the infrastructure and standards to have regulated security tokens on their platform. With ties to the World Economic Forum and having some global elite status members on their team, it's one of those I guess you could call New World Order coins. I think it's one of the better investments in this space after regulations kick in, and that's really going to be what allows LCX to really start gaining traction. So it's sitting at about 4% of my total portfolio, and we got in around 5 cents, so we're still a little bit up, and I had sold a good majority of my bag during the Coinbase listing, but since been looking to maybe pick up just a little more if it gets back to my buy-in price. And next we got XDC, Zinfin Network. XDC is another layer 1, but what they're trying to do is completely digitize the entire trade finance industry, which is worth about $19 trillion today. And they've got some of the deepest and most regulated connections in this space with the ITFA, TFD initiative, and the International Chamber of Commerce. And of course, doing all this while being ISO 2200 compliant. And by already working so deeply with these regulated organizations, I think XDC makes for a pretty good long-term bet on blockchain and DLT playing a key role in the future of digitized global trading. So currently it's sitting at about 4% of my portfolio, and we got in around 6 cents or so. So we're roughly around break even. And it's definitely another project I'm looking to slowly stack closer towards the bear market. Actually, I'm just going to stop saying that. Pretty much all of these projects I'll be looking to accumulate a little more of during the bear market. But being such a regulated project, just like LCX, I do think it's another one of these where once more standards like ISO 2200 and MLTR gets implemented, they'll begin to see more usage and adoption in their sector. And then onto HEDERA HashGraph, which is sitting at another 4% of my portfolio. So HBAR already has such a strong case for corporate success with their governance council consisting of Google, IBM, LG, and a bunch of other huge corporations around the world. And actually my next video will be all about breaking down what HEDERA HashGraph is and what it does. So make sure you guys tune into that if you're curious. But pretty much, yeah, they've got a very strong counseling board that's made of some of the top level enterprises around the world. That should really show that they're not fucking around and actually looking to build something for real world application. And with it having already processed over 1 billion transactions and being the most used layer 1 today, I honestly think you can't go wrong with a little bit of HBAR in your portfolio. Now, I got in around the 15 cent mark, so we're still up a decent bit, but it hasn't been something I've been buying too much of lately, just because I think we'll see better buy-in prices towards the bear market just due to their tokenomics. And again, it's not, my HBAR bag isn't something I'm looking to touch for quite a while, probably until regulations are more clear around the world and we see businesses begin building solutions on HEDERA. And now we've got VECTORSPACE AI at another 4%, and we can see this definitely has seen better days in my portfolio. Having bought the majority of my bag around the $4 to $6 mark, we're down pretty badly right now. But the vision VECTORSPACE AI has with augmenting all the data we have into smart correlation matrix datasets just really makes sense to me. They're one of the few projects in the space that's actually a real business with a model and plan, building their solution through blockchain. It just so happens that at the core of their business lies the VXV token for data provenance, something that's huge in the industry. It's definitely one of the projects I've begun averaging down on and will continue to do so since I bought in so high. And honestly, I'm not too worried about what's happening in the short term. As from the researching I've done and seeing VECTORSPACE's progression in bringing in multiple new PhDs into their team, it really shows that they've been building regardless of what happens in this market. And if there's PhDs seeing potential in this, it should really make you think. And so again, another long-term play, but I think with the amount of demand for something like this to track relations with data through machine learning will be huge in the coming years with the growth of genetic sciences and smart investing and all these other automated things that are being developed around us. And then finally, we got Bitcoin at about 3% of my portfolio. This might be a bit of a surprise, but really shouldn't be all too much of a surprise from an investment standpoint. since this market is still pretty heavily reliant on what Bitcoin does at the moment. So it serves as a little hedge against altcoin volatility and kind of serves as a market index as well. And honestly, it's kind of a bag I've just been kind of passively building up in the back from lending the little amounts of Bitcoin I had when I first started out in this space, since it was one of my earlier investments that I picked up around the $20,000 to $30,000 mark. So it's just kind of accumulated and grown over time. It's not something I look to dollar cost average really. But yeah, I'll probably be looking to hold at least a little bag of Bitcoin for quite a while, as you can't really go wrong with it, right? So yeah, that's what my mid to long-term portfolio is looking like. Now let's take a quick look at some of my smaller holdings and wish lists. So these are either projects that I'm looking to stack and add into here, or just projects that are worth 1% or less of my portfolio. So first, there's Lattice Exchange. I've got a small bag that I got in around $1, so things definitely aren't too pretty there. But being the trademark exchange for Constellation's hypergraph and a cross-chain next-generation exchange with a bunch of other features, I really see some strong potential here. And then we've got Morpheus Network. I only recently picked up my first small bag of Morpheus, and with some of their connections with FedEx, UPS, Oracle, Salesforce, and a bunch of others, it really gives them a strong case of being one of the pioneers of DLT and blockchain within supply chain, right up there with VeChain. And then we got Merit Circle. I haven't started building a stack of Merit Circle yet, but it's something I'm gonna look to do soon. It's one of the projects in the gaming sector that has a unique vision and plan to build out this ecosystem. Ultra, same thing as Merit Circle, another very fundamentally strong play-to-earn gaming project that I'm looking to start building a stack of. HEDERA, I'm holding a little bit of and bought around 60 cents or so. They're doing something pretty unique by building a network of a hybrid between a blockchain and a DAG. It's still pretty early in development, but definitely a layer 1 I'll be keeping my eye out on. ALGORAND, another very prominent layer 1, already showing some potential and adoption around the world within some institutions, and even talks of building a CBDC on their platform, and also being ISO 2200 compliant. I hold a small bag of Algo that I got in around 60 cents and flipped the majority of it into QUANT back when Algo got to around $2 or so. So it's something I'll be looking to buy back more of once we see these lower prices, if we see these lower prices. ALKIMI, another project built on Constellation's hypergraph, but by building the first ever DEX for advertising. It's definitely something super interesting and innovative. I haven't quite built up a bag yet, but another one of those projects I'll be keeping my eye out on, since it's really got the first mover advantage in doing something like this. Then we've got METAHERO, and they've got a super cool idea of building the gateway into the metaverse from our real physical world through meta scanners. And again, another project I've got my eye out on, but currently haven't bought any of yet. Energy Web Token, they've got the mission to decarbonize the whole global economy and have some pretty strong connections to it, like R3, for example. I've got a really small bag of Energy Web. It's like around 0.5 of my portfolio, nothing too serious at the moment. And next up, we've got ALGORAND. It's one of the newer layer 1 projects to have launched, so it's still pretty early and speculative, but they've got a lot of cool customizable features on their platform, like private smart contracts. I haven't started a bag of this yet either, but definitely another one of those layer 1s I'll be closely looking over the coming months as they continue to develop more. And then we've got CASPER, another layer 1. But what makes them so unique is that they're getting adoption and usage from China, where, as we all know, they've pretty much banned off anything crypto related there. So definitely interesting to see where this will go. I've got a small bag of CASPER that I recently started building and got in around an average buy price of 13 cents or so. So again, not the prettiest. And last but not least, on our small holdings and wish list, we've got XRP. I don't think this needs an introduction. Super controversial project, obviously, but I think the risk reward from this SEC lawsuit makes it a perfect trade risk reward wise, but also with all the connections they've got in the background too. So I got a small bag of XRP I picked up literally a few days after the lawsuit was announced for about 20 cents or so. So at least we're still up a bit on that. But yeah, that's a whole breakdown of my portfolio for you guys. Again, none of this is to show my bags or any form of investment advice. As you've seen, I'm pretty down on some of these projects. And these are just the ones I personally believe in. So please always do your own research before making an investment, and don't trust what some anon on the internet or even your best friend tells you when it comes to this space. And so if you guys liked what you saw today, remember to show some love by hitting that like and subscribe and turning that ringer on so you don't miss a thing. And don't forget to check me out on some of my other content platforms. You guys can always reach out and connect with me through my Telegram, Twitter, and Instagram. Or if you guys just want more fundamental analysis, check out my Medium for some articles. All this can be found at Tokenicer. And for those of you guys who don't want to read, I got you guys right here with the Spotify podcast at Tokenice TV. So hopefully everyone got something good out of it and can see the perspective I look at this space in a little more clear point of view now. But until next time, guys, stay safe and keep grinding. I'll catch y'all later. Peace.